Good morning.
Right. I think it's 11 o'clock now, so shall we kick off without further ado? We don't want to be any longer than perhaps about half an hour, 40 minutes for this webinar, the theme of which is access to finance for wholesalers. Joining me today from ASC, we have Joshua Edelbaum, and ASC in Wales, Ben Davidson. So I don't know if Ben and Joshua, if you'd just like to introduce yourselves and tell us about who ASC are and what your roles are within that organisation.
Sure. Morning, James, and morning, everyone. Thanks very much for joining us here today. My name is Josh. I work in ASC head office, so I deal with a lot of our office coordination, dealing with lenders, helping with clients arrange finance for their businesses. Ben is our regional director for Wales, so he covers deals in the Wales region and from people who are in that area, which does result in him dealing with inquiries based on properties around the country as well. ASC Finance for Business, we are commercial finance brokers. We have been raising finance for small businesses and entrepreneurs now for over 50 years in total. So we are one of the longest running broker firms in the country and well established in that time. So we work with a whole variety of different lenders, from the traditional clearing banks, high street banks, whose names most people will be familiar with, to more niche and specialist lenders as well. As brokers, it's not our own funds we use. What we really do is we help people put together their strongest proposition to then go out and take to the various lenders that we work with, negotiate the deals for them to ensure that they have access to the right finance. I think we've done the last 12 months over 140 million raised for small businesses across the country, and that number is currently only growing, which is great. So yeah, that's who we are.
Fantastic. Thanks very much, Joshua and Ben. Right, so without further ado, let's get into the questions. So wholesalers could be raising finance for a whole host of different reasons, mortgages, working capital, asset finance, whatever it may be. But generally, how difficult is it for them to raise that finance?
Hi, James. So if I cut in there, probably best if I answer that. So obviously, as I say, I'm the chap on the front line dealing with clients raising this cash. And you'd think to yourself, okay, so how difficult is it to raise finance? That should be a simple answer, isn't it? It's like a yes or no, but unfortunately, life is never that simple. I think it all rather depends on, okay, so what do you need the finance for? What will it allow you to do? When do you need it by? When do you want to pay it back? It can heavily depend on your personal circumstance. It can depend on the business performance, both historic and potentially the forecast. Really, overall, what we're considering here is, from a lender's perspective, is their perception and assessment of the application as far as risk is concerned. Now, the good news is that we've got, somewhere in the region of about 345 lenders in the country that are willing to lend money. And that creates a highly diverse and highly competitive marketplace that we operate in. The bad news behind that, of course, is that, well, the commercial finance is a highly diverse business. To give you an idea, James, in the last sort of 2 weeks or so, I've had an inquiry from a church that wants to buy a chapel, which is a bit of a first for me, I've got to be honest. And then equally, I honestly, the next day after that, I got an inquiry from a company that hires Ferris wheels, and they want to expand their business. They hire Ferris wheels nationwide, and they're going to expand their business by buying an additional Ferris wheel. So you can think, okay, so if we think about the application process, how could we possibly standardize the commercial finance application process when you've got such a diversity of different businesses wanting to do different things? The criteria and the information you're going to require from a church is going to obviously vary enormously to the information you're going to require from the Ferris wheel. And in turn, what that means is that you've got 345 banks perhaps working in their own way, requiring a different application process and probably requiring different information, and applying their own methodology behind the assessment process, and as say assigning that sort of risk profile. So it can make it quite difficult from that perspective. And I think what actually results in is that your clients, no doubt, will get bombarded with banks advertising the fact that they want to lend them money. The clients then, apply to a bank to see if they can raise the finance they need, probably through either the wrong bank at the wrong time or through a lack of preparation in the application process, or not being able to understand what the bank wants them to tell them, inevitably means that they get turned down for finance with no real reason why. That's further compounded, of course, because we know that traditionally you perhaps go to your local branch and speak to your bank manager. Well, the bank manager doesn't exist anymore. If you do, and if you are lucky enough to have a local branch, you get into the branch, they haven't got the authority to make a decision on your behalf whether they can lend you money or not, which means you get funneled off to a call center, which is a sort of computer says no tick box scenario. And we all know how well call centers work anyway. You're questioning yourself, really, is it really worth it in the long run, especially as a business owner, because obviously you can have huge demands on your time running your business in the first place. And you're presented with this sort of minefield of 345 banks working in a whole combination of different ways, with no one that you can really talk to because you're having to go through the call center. And you've got to ask yourself, okay, as a business owner, where the hell do I start? Do I have time to be able to go through this pain? There is a fear of rejection, not because, personal fear of rejection, but if I'm going to assign this amount of time to a project and it all goes wrong and they don't give me the money, what's the point in the first place? And there's also a perception that this, it may be expensive. So yes, raising finance can be tricky. The job of us, as Josh said at the introduction, we do it for 50 years. Our job really is to take the pain away. We're quite insistent. We want to be able to take all the information from the client. That enables us to be able to create a presentation in a clear and concise manner in a way that the bank will understand, to be able to assign to the right bank with the right profile and hopefully the right appetite for the industry at the time. To be able to then come back to you as a client to be able to give you, to confirm whether they're going to lend you the money or not, and indeed on what terms they're going to lend you. So overall, the long-winded answer is, yeah, it can be tricky, but actually if you've done it in the right way and you have the experience and the application is correct, then it can be a lot easier.
Okay, so we know that it's can be a tricky process. Help is on hand, people will be pleased to hear. But what are the different types of finance that are available? Joshua, maybe you could answer that.
Sure. So the first port of call for most businesses looking for finance is to go to their own bank. I think that's about a third of all SMEs make that first call. And as Ben said, that's not always the straightforward. It's quite often the call center or the gentleman in the branch who might not have the authority to make those sorts of decisions. But that bank loan is sort of the one that springs to mind, the traditional, I'll borrow some money and I'll pay interest regularly on that. And that's what is quite, is first sought by a lot of different businesses. There are a lot of other different lenders in the marketplace who offer different products and a lot of different other types of finance. So I could talk for hours about all the different types there, but just to go through a few of those, as well as sort of the high street banks who offer those traditional loans, you've got a lot of challenger banks or non-mainstream names, ones without a high street presence, who can provide similar loans, whether they be secured or unsecured, depending on the lender and the circumstances of that. In the last 5 to 10 years, you've had peer-to-peer finance become a much more take a much wider slice of the market. So you've got lenders who come in and, in effect, from the business's point of view, it works in a very similar way. They still borrow an amount of money and have to repay the interest on that. But in reality, they're not just borrowing that money from one source, i.e. the bank. They're borrowing that money from up to hundreds of individuals, some of which are lending £20 to that business. The lender itself is the packager, for want of a better word, who puts that all together to make that process easy. But the fact those lenders are able to provide a much wider range of finance. So, for example, some of those do a lot more unsecured finance for 1 to 5 years, which opens up a lot more options for businesses struggling with cash flow. Asset finance is a big one. So you've got businesses who are looking at large assets such as trucks or fleet of vehicles, those sorts of machinery. There are lenders who will lend secured against those particular assets. And you've also got things such as invoice discounting. So lenders who are have issued invoices and take a long time to get paid and might be suffering from cash flow problems from that. Invoice discounting can be a good solution to get money into that business's pockets earlier, to ensure that they're not left short. The other item, one area of finance which we don't really specialize in but is available, is equity finance. So businesses who sell shares to other people or sell a stake in their business for money, and then they'll pay out through that share ownership profit, etc. It's not something which we deal with ourselves, but it is potentially an option for some businesses depending on their state.
Okay, so we've got loans either secured or unsecured, peer-to-peer finance, so it's asset finance where something's secured against a fleet or a piece of machinery, invoice discounting, and then equity, which is not something that you necessarily get into. But what are the lenders actually looking for those different types of finance, Ben?
So I think, as I say, you've got high diversity of different lenders wanting different stuff. So, I mean, from our perspective, all our offices will work in the same way. And the reason we do that is because we know it works. So when you sit down with any of our directors, the very bare minimum of the stuff that we're looking for is obviously, okay, so how much is the cash you need in order to do whatever it is that you want to do? And then we're looking with regard to saying, okay, where's the minimum, where's the cash that where's your commitment, what you're committing to the overall project. Then we're looking for any kind of security. So what is the from a bank's perspective, again, it comes back to that risk profile. So if everything goes wrong, what is the security on offer? More importantly, repayability. So this is where they're saying, okay, from the service, what's the loan for, but where are we going to get the money to pay back the loan? Serviceability, repayability, or capability of paying that loan back. Your client's experience is incredibly important to the application. We really, we want to be able to demonstrate to the lender that you have a demonstrable track record of success, whether it's in the industry or within business in general. And that can make a huge difference with regard to the application process. So hence why it's so important, really. Again, it comes down to that communication, to be able to sit down with someone on a face-to-face basis, to be able to get the as I say, the bare basics out of it. So that's the sort of headlines of the information they're going to require. But ultimately, to really apply properly to a lender, you really want to be able to do a real proper fact find on the customer, to be able to extract the right information to present it in the right way to the lenders. So hopefully just those 4 key bits is the bare minimum, but rest assured there'll be a lot more after that as well.
So you've got the the track record of success, the repayability or the serviceability of the loan, so what you want the loan for, and then the the risk profile and the security. And then interesting, you said about the fact find on the lender. How would a business do that?
So it's more about fact find on the client in order to be able to then extract the right information to present to the right lender. So I mean, as far as from a client's, from a business perspective, fact finding on a lender is going to be an incredibly difficult task. You've got so many different lenders in such a, as Josh said, you've got direct, proper, normal traditional lending, peer-to-peer lending, and a whole host of other stuff in between that as well. So you could spend weeks and weeks researching the marketplace to still not really decide on which lender you wanted to apply to.
Yeah.
I think one thing to add on what Ben's said there is, although yes, all those items are things that lenders look for and things which enhance any application for finance. But if you don't have one of those, don't worry about it. There may still be finance options available. So if you don't have security for a loan, you may still be able to get finance. If you don't have a strong financial track record because you're a new business, there might be still lenders who are able to provide finance for you. Now, if you come and you say you have no track record, no experience, no security, no income, no nothing, it's going to be very difficult. But if you come and say, look, I don't have a particular track record, but I've got experience in the related industry, I've got some security for the loan, I've got all these positive factors, that's the sort of thing that can be argued and a good case presented to a lender to get a form of finance for you. And the other question, which is sort of related to that, which we get asked quite a bit, is what documentation businesses need to require. And we're quite the one that sort of gets asked quite a lot is, do I need a business plan? And what you don't need to do before you start out on your finance journey is put together, and we do see some businesses who do this, a 50-page business plan, every single detail on there, which is absolutely wonderful. But if you can't get finance for a reason, you've wasted a lot of time, effort, and money putting that together for the lender. Lenders probably don't always need a business plan at all, let alone something that detailed. So it's worth finding out what lenders might be willing to support an application before you plough too hard in getting everything ready. And then as you go through that process, be on the understanding that, look, you might need to expand your one-page business plan a bit if the lender needs to know a bit more about projected values for the coming year, for example. So it's for businesses not to run too fast before they start that journey. It's to get that guidance, or speak to a broker or whoever it may be, and then plan accordingly on what information they need to put a strong application based on their individual circumstances.
Yeah, but keep it simple is the headline. Okay, so one of the things that we hear a lot from our wholesale members is, and our supply members, is the cost of doing business escalating. So we're trading very much in an inflationary market, particularly in the food and drink sector. Labour availability is very tight, which is driving wage inflation. Availability of product is a challenge because of various externalities around the world. So Ukraine, COVID, Brexit, a whole host of different areas. What finance could wholesalers and suppliers access to mitigate against that escalating cost of doing business?
Sure. Well, I don't have a magic answer in terms of how to reduce costs, unfortunately. So apologies if anyone was hoping for that. There's two sort of avenues which I think are probably suitable for someone in that situation. Number one is sort of the bank loans, or even the peer-to-peer loans which are available. We do see some businesses come to us seeking, for example, a cash injection for working capital of, say, 50,000 or so, sometimes a bit more, just to help them through a certain period of time where they need to hire on some extra staff, cover some extra additional costs which are there at the moment, and repay that back over a longer term. Or it's, look, if the business needs to take on more projects in order to they need to grow and do more in order to keep their profitability levels at a level which works with the rising costs. They need the funds to be able to do that. So, for example, get the extra vehicle in, or whatever it might be, extra staff, marketing costs, which they need in order to respond to the current cost crisis. That's the sort of things. Some of those peer-to-peer loans, the advantage of those is that they act very quickly. So we see cases where people come speak to us, and in a week or two they've got funds in their account, which particularly for businesses who might be a bit short on cash, that's great. The other one I'll go back to is invoice financing. I think according to a recent study which quoted by the ICAEW, late payments cost small businesses £684 million a year. So if you are a business where you're frequently being paid late, and you're therefore fronting up a lot of your cash at the beginning and not getting the payments until much later, and that gap is causing cash flow problems which are exacerbated by the cost of goods to begin with, then an invoice financing facility could be a solution to help get you that money earlier, in order to keep things ticking over.
Okay. And then the sort of corollary of that is that the Bank of England are trying to use interest rates to take some of the heat out of the economy, to deflate it. We've seen base rates going up to 3% just last week, with more increases potentially on the way. So given that, and the fact that the cost of raising finance is therefore going to go up, is that making it more difficult to do so? Ben, what do you think on that?
I think the first thing we can say that the liquidity in the market is still very, very strong. And you said before, we've got such a high number of banks in a competitive world. I mean, they're in the business of lending money, so they still have to lend money regardless of whatever what's going on in the markets, etc. However, I think we were commercially naive if we sat here and said no, it's absolutely fine, don't worry about it. We've had huge instability, real material fluctuations in the market, probably greater than I've ever experienced in my career, which has undoubtedly made it more difficult. I think in the commercial sector generally we've been sheltered a little bit more than the residential sector. The funds available in the commercial sectors do work in a different way, but overall, it has made it generally more difficult, which just then emphasizes the fact that the application has to be as robust as physically it can be. And I'm sort of probably second guessing your next question is okay, so how do we make it? How do you maximize your chances, isn't it? How do you make sure when you apply, how do you maximize the chances of being accepted? I guess, James, is that your next question?
It's as good a question as any. So yeah, how do you maximize your chances of getting accepted?
I'm glad you asked that, James. Josh, how do you maximize the chance?
There's a couple of things which can help that. The best thing is to have the right lender. You can have the strongest application, the best business case, but if that is not the area that lender wants to deal in, is not their main focus, they will either provide terms which aren't attractive or not want to provide finance on that. So knowing which lender to go to is key. Even between some of the high street banks, there's a focus in some areas with one which aren't a focus in areas of the other, or one lender might be overlent in an area and want to come back in that particular industry. So knowing which lender is the right lender to approach, or being able to approach multiple lenders to make sure you get the right one is key. Approaching multiple can also be quite time consuming, so you need to balance that with the needs of yourself and your business. But putting together that strong application is very important. I know a lender who talks to us about applications for finance they get, and they get some applications which are, for example, property based, where they literally get a copy of evaluation in and say, what would you lend? So no information about who the borrower is, the client, or anything like that. And they expect to be able to provide attractive terms on that proposition. The approach that ASC take is to make sure we put a strong application, which is clear, concise. The lender has all the information they know to make a decision. If there's any aspects which are weaker for whatever reason, they're explained to the lender upfront and they're mitigated upfront. And that is something which, from our interaction with lenders, yields results, because they know, yes, this is the deal I want to do, this is why, here are potential problems, but these are the potential solutions. And that application process, the best way that can be demonstrated that makes a difference is we quite often get clients who will come to us and say, look, I've gone to my bank on the high street and I haven't got finance, and we have actually gone and got finance through that exact same lender they had approached for that exact same deal. And that just goes to show it's the knowing who to approach in that lender and how to approach when putting that strong case together can make a complete difference from being turned down to having the finance which works for them. So those are the main aspects. I think I have to do the little bit of a sales pitch from a broker's perspective. That as brokers, what we do is obviously we know which lenders are in the marketplace, we know what is available, and we know how to present applications to those lenders to get the right results. The finance process can be quite time consuming. It can be quite a lot of information you need to get together, so it can be a bit of a hassle, particularly when one is trying to run their own business at the same time. So part of what we do is to take that hassle away from the borrower so they can focus on their business, and we deal with the finance side for them and guide them through that process. So that's what we do as a broker to help maximise that situation. But even if you're not using a broker, putting together that strong application and going to the right lender would be key.
And do you identify the right type of finance and the right type of lender as part of that process as well?
Yeah, so we would always talk with a client and say, look, these are the potential options for you. If, for example, a client's got some security that they could use, we can talk through them and say, look, you have the security. Those rates are generally speaking more attractive than unsecured finance or finance that you'd get through invoice discounting, whatever it may be. But you're then using security, and they talk it through so the borrower knows what the impact of each of those would be and is able to make the right decision for them. And quite often we have borrowers who would say, look, let's try this approach, and if that doesn't work, we can then approach these types of lenders for this type of finance as a sort of second choice.
Sure. So if any of our members or anyone on the call wants to investigate working with you guys further, what's the best way to do that?
Best way to do that is probably to drop us, give us a call or drop us an email, and we can then pick things up. We have a sort of initial consultation with the clients for no cost or anything like that, which we're very happy to. I don't know. Can you see the details on the screen?
Yep, indeed.
Yeah. So you can contact us at that number or that email address, or there's a website as well. But yeah, we're very happy to have a no obligation conversation with anyone who is interested and wanting to find out more, or just simply talk through their options, even if it's a bit further down the line and they just want to have a contact who they can come back to later on. We're very happy to talk to them.
Fantastic. info@asc.co.uk is the email address. Brilliant. Well, I said it would be half an hour. That's 26 minutes. Would you have the opportunity for any questions from the floor? If anyone's got any questions they'd like to ask, just put your hand up. If there isn't, if we've covered everything, I think we've been very comprehensive in the last 25 minutes or so. There's no more business other than to say thank you very much, Ben. Thank you very much, Joshua. Thank you for your support for FWD and your ability to help members access finance. And we will follow up and send out the details of how people can get in touch with ASC after the call. So thank you very much. Really appreciate it. Any final words from you guys?
Nothing more from my side apart from thank you very much, James, for taking the time today, and we hope that everyone has found this useful and informative. And if anyone has any questions, please do follow up with us.
Yep.
Fantastic.
Thank you, James. Much appreciated.
All right. Thank you, Joshua. Thank you, Ben. Thank you, everyone, for dialing in, and have a good rest of the day.
Thank you.